I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today is September 1st.
And this is your interest rate update.
If you're new to the channel, be sure to subscribe, comment, and like. We do this Monday through Friday. And remember, this is for informational purposes only. This is not financial advice.
Yes, we're not financial advisors, but we hope to be your mortgage brokers. So here we go.
Okay, so today we see interest rates creeping up to 5.5% on the 30-year fix, the 15-year fix at 4.875.
The 30-year FHA, 4.99. The 30-year VA, 4.99. Up at 8th on the government loans.
Yes, and we can tell a lot of people here on our channel, we are mortgage brokers. These interest rates that you see right here are based off of these loan assumptions for conventional FHA and VA, and they come with no extra fees, no buy-down points. If you see interest rates that are 5.5%, you're quoted by a bank, most banks will be charging extra fees to get the rates down this low. Okay, because the average rates, if you're going to be looking, competing banks, they're probably going to be about 6% today.
Yeah, especially today with these rates on how fast they're moving. Pricing has become more important than ever, and understanding what's in that price. These scenarios are real scenarios. They're not crazy hypothetical 1% chance scenarios. There are no points. If you do see a rate like ours, send us that LE, give us a call, let us know. We'll help you kind of walk through and see, are there extra fees? Also known as points.
Okay, so just a couple days ago, Fannie Mae, most people don't know who Fannie Mae is. The important thing to know about them is they're a quasi-government agency.
Think about it as an ant who kind of takes care of you. A distant ant that lives in a different country, actually.
So yeah, Fannie Mae buys the most of the notes,
of the mortgages. Yeah, when we say notes, we mean mortgages. And if they didn't buy these mortgages, there would be no way that the rates could be as low as they are.
So think about all the banks out there who say, we got these 30-year fixed mortgages, all the banks that market it and sell the 30-year fixed mortgage. 99.9% of those banks don't own the note. They're just collecting your payment. The entity that owns the note is probably going to be Fannie Mae or the brother government agency.
The uncle.
Yeah,
right.
Freddie Mac.
Freddie Mac. And again, when I say pricing, interest rates, even though interest rates have ticked up a little bit, over the past few months, they're still low compared to what you would normally get if you were to do a personal loan or other type of business loan or things like that, because Fannie Mae is basically going to the bank saying, listen, if you provide, John and Jane a home loan, we will buy that home loan for you, which allows them to give a lower interest rate. So Fannie and Freddie are really here to help keep that housing market moving.
So when they speak, it's usually I think it's very important to kind of listen to them. Their analysts say that rates will fall on an average to 4.5% in 2023. And the way I'm reading that, and I want to kind of see that, is because consumers, and here's the key point. This is from CNBC. Consumers shouldn't necessarily delay a home purchase if they find an affordable home they like. This is what a lot of experts are saying. Of course, the news right now we have interest rates at 5.5%. So what does someone do if they're thinking, hey, well, if rates are going to fall, what are we going to do? What am I going to do? Should I buy now?
Yeah. So there's a couple of different schools, and it depends on how you think. Some people say, 4.5%. Why don't we just wait until we get that interest rate to go out and buy? The problem with that is that by the time it gets to 4.5%, the housing market can likely already, be up above where it is today. So I think the important thing to know right now is that basically interest rates we're not for sure, but interest rates should not stay as high as they are today. So, if you are purchasing, if you are refining because you have to, there will be opportunities to refi in the future. And that 4.5% may look nice today. Yeah. Well, guess what? 24 months from today, that could be 3.5.
Yeah.
And then another 24 months later, that could be 2.5. So the point is don't try and guess where interest rates are going, but do follow advice when people like us say they should come down, hopefully.
Yeah. And I would say it like this: do not day trade your home. And day trading, there are analysts who have done studies on day trading. If you day trade stocks, 90% of them lose money. 90% of people who try to time the market are going to lose. Same thing will happen with real estate. Real estate is an important thing not to time or try to figure out what the best time to get in or best time to get out. I'm talking about your home, the place you're going to be resting at night.
Yeah.
Buying the home, not timing the market.
I would also
so important.
I'd also think that there'd be a really important index to follow if there was such a thing as, quality of life for those day traders. I guarantee you quality of life for those people, trading every day.
Yeah.
It's tough.
Yeah.
The stress. So you have a life to live, you have a job to stay good at, you've got food to put on the table, you need lights that you know will be on, rent not going up. So there's so many reasons why buying does make sense and not having it to be any more stressful because you're trying to time it perfectly.
Yeah. If you would have tried to time it perfectly, you would have been waiting since 2016. In 2016, there was a lot of negative press talking about where home prices were going to go, and you would have never bought.
Right. Yeah, that's a
and
perfect
you would have been
example.
listening to the media and would never bought. Again, there will be fluctuations, but do not time the market. Okay, everyone, we do this Monday through Friday. Be sure to subscribe, comment, and like. We'll be back tomorrow.
All right. Thanks, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.